Welcome to this week's episode of We Got You Covered on RVN TV. My name's Rob Shestack, and I'll be your host for this program. We come to you every week and we talk about a whole bunch of different things insurance related. They can be health insurance, employee benefits, life, disability, and so forth. And today we have with us Dr. James Hilliard. And just to give you a little bit of background on James, he has his MBA and PhD from University of Connecticut. You were an assistant professor with the University of Georgia and Northern Arizona University. And currently you are Associate Professor Risk Management at Temple University. And you started there last year, and we had the pleasure of meeting late last year in one of the programs that we do at Temple University. And I'm an alumni at Temple University, so go Owls, right?
Go Owls.
So today we're going to talk about gaps in insurance, and they could be a whole bunch of different gaps. And when people think of gaps, most of the time they think of deductibles for health insurance and so forth. We're not going to talk about health insurance. We're going to talk about other gaps in coverage that very few people think about. And just to start out with some statistics, which I like to do, is Swiss Re estimates that the global protection gap for weather-related risks is almost $180 billion. That could be underinsured or uninsured risks. And Aon reported 64% of all 2018 global insured losses incurred in the U.S., and that the average was $31 billion of losses, $31 billion losses every year over the last 20 years. That's quite a number of risks. So James, to start off our program, you mentioned you like to share a quote with everybody. Would you like to share that with the audience today?
Yes. As I've thought about gaps in insurance and ways to sort of position that discussion, this quote came to mind. During the original war in Iraq, Donald Rumsfeld, in response to a press conference question about the situation on the ground, he said there are known knowns, and these are the things that we know. We also know that there are known unknowns, which is to say that there are some things that we do not know. But there are also unknown unknowns. The ones we don't know, we don't know. And if one looks throughout the history of our country and other free countries, it's the latter category that tend to be the difficult ones.
Wow, so that's a lot of knowns and unknowns to know.
It is, yeah.
Right? That's a very good quote, and I never really thought about what we know of knowns and what we don't know and unknowns. And I looked at your presentation, it was quite impressive. So how would you define what is protection gap, or what is the gap in protection that most of us don't think about?
Yeah, when I think about protection gaps, I think that the idea that you have an insurance policy and you think that that insurance policy must cover certain things, and then you find out, hopefully not too late, but too many people find out when they have a loss that actually is not a loss that's covered. They may find themselves in court thinking that the insurance company will defend them and the insurance company is not bound to be there, or they may have suffered a loss and they go to pay their contractor and find that they have to find money out of their pocket and are not going to get reimbursed by the insurer. So those were primarily the things I was thinking about in terms of gaps in insurance.
So we're not just talking about things that you're responsible to pay, like a deductible or co-insurance or whatnot.
Right.
We're talking about gaps in coverage where you may think you have coverage and you don't, or you may think you have coverage, but it's real limited coverage.
Right. Or it could even be that you have coverage and you have limited that coverage either intentionally or unintentionally, but never anticipating that you could actually breach the limits that you had put in place.
So can you give us an idea? You mentioned, the Donald Rumsfeld quote, known knowns, unknown unknowns, and so forth, and it's kind of like a quadrant, right?
That's what I look at as.
So
yes.
the first, can you give us an example of a known gap or risk?
I think about, well, in general, I think about known knowns as something I know, right? I know calculus. I know I can take a derivative. I know I can take an integral. I know that, right? It's a known. I know that I know it, and I can demonstrate that I know it. Now, if we look at our insurance policies, and we have a homeowners policy, for example, we know that our insurance policy is covered for fire. We know that our insurance policy covers us for liability. We may not know the details about exactly what that looks like, but we know that that coverage is there. And so we can be pretty confident that if we have a liability exposure, we have a liability loss, that the insurance company is going to be there when we need them to be there.
So give me an example of a known unknown.
These are things that we know that we don't know. Now, we talked before the program, I realized that you may know more about aerospace than I do. I know that I don't know rocket science, and therefore I can sort of put that off the table of things that I know about, but I'm fully aware that I don't know about rocket science. We might not recognize, for example, exactly what is covered under a homeowner's insurance policy. We might not know about whether arson is covered, for example. We might not know whether intentional damage is covered or how the insurance policy would respond to it. We know where we would go to find out that information, but we may not know that intuitively. So I would consider that a known unknown. We know what we don't know.
And that's when lawyers start getting involved.
Exactly.
Right? How about an unknown known? So the first quadrant was a known known. Then we have a known unknown. What about an unknown known?
Yeah, that's a little bit harder to talk about unknown knowns in the context of insurance. But when you, in general, if we're trying to fill out the quadrants, one unknown known is that I know how to make my heart beat. I don't have to do anything to make it happen. I don't even have to think about it. I unknowingly know how to do that. I know how to make sure that I get enough to eat. I know things that, without even thinking about it, things that I need to do. Our habits are kind of unknown knowns, and there are kind of ways that we can approach it. It's a little bit harder to sort of identify an area of insurance where we have an unknown known, but those of us who work in the industry have a much clearer understanding of what we know intuitively, and maybe the public and the insured policyholder base doesn't have the same clue.
So would an example be, I know I need life insurance, it's just how much do I need?
That could be an example, sure.
Okay, or disability and so forth. What about an unknown unknowns?
Unknown unknowns are the things that we really are not clear at all on. I might not know how much an auto accident could cost me if I'm at fault. And I don't really think that I need to know that, or it's sort of completely outside of my zone of consciousness. So if I find myself in the context of an auto accident and I have minimum limits on my auto insurance policy that are mandated by the state as a way to save money, I may find myself after an accident in really deep trouble. And if I had thought about it ahead of time or had been made aware of it ahead of time and moved that from the unknown unknown into the known known category, I could have really protected myself.
You know, it's interesting when you bring up auto insurance. I know certain states, in New Jersey, there's a minimum amount of coverage you have to have. But a lot of times, it's just some state minimum just to make it affordable for people, but that really puts everybody at risk.
It does. We talk about this in my classes often when we say, in Pennsylvania where I live, the state minimum for auto insurance is $10,000 per person, $15,000 per accident. And so when I start talking to my introductory risk management students and ask them how many of you know what your insurance policy looks like, and about a third of them raise their hands. The others either don't drive or their parents' policy covers them. And then I ask further, how many of you who know what's going on have minimum limits, and most of them do. And then I ask them to consider the possibility of an auto accident where they're at fault. And as soon as the ambulance is called, we're $2,000 in. And then they get to the emergency department and we're another $4,000 in. We haven't even treated anyone yet, and we're halfway to our limit for a single individual person. And so yes, that leaves many of us at risk. If I'm driving down the street here and I'm hit by someone else, then I don't know what their insurance coverage is, and I may be left responsible for medical expenses for which I have no capacity to pay.
So why would the state just allow these real small minimum amount of coverage? I mean, and I guess it's to get into the game, but at the end of the day, they're really leaving everybody just as if they didn't have any insurance at all.
They are, and I think there are a lot of holes. One of the things that some of the theoreticians in insurance have talked about is trying to assign the cost of driving to individuals, now, and also in a way that people will actually absorb that and not try to get away from it. So for example, if someone with a relatively low income wants to get a better job, they may need to have vehicle transportation to get to that job. We wouldn't want to discourage that, right? But we would also want to make sure that that person fully absorbed the cost, or at least attempted to fully absorb the cost. Now, if everyone was forced to carry minimum limits of $100,000, $300,000, then very few people who have that minimum wage or low-paying job would be able to pay anything, and they would completely skirt the system. And they would drive not only uninsured, but they'd also drive unlicensed. And in states where vehicle inspection is required, they drive uninspected vehicles and take the risk of getting caught rather than to buy insurance.
Well, I know in New Jersey, about 12 to 14% of all drivers are uninsured in the state just because it's so expensive
That's
to insure.
fairly common across the country as well.
It is. So what do you do in that situation? You just drive without insurance and hope you don't get caught?
That's what people do, but for those of us who are aware of that risk, for whom that has become a known, we buy uninsured motorist or uninsured motorist coverage, which allows our insurance company to take the place of the tortfeasor, the person who was negligent and hit us, so that we now have coverage that goes up to what would be the limits that we're covering ourselves for in case we cause the accident.
But my insurance is basically paying me for their at-risk or
That's
their
right.
fault.
Yes.
And that's uninsured motorists.
Uninsured or underinsured. Some states call it both. Some states call it one or another.
Okay, pretty interesting. So let's talk a little bit about risk and home-based businesses, because a lot of our audience, they could have a home-based business. I know a lot of our hosts here have home-based businesses. Let's talk a little bit about some of the risks associated with that, and would a normal homeowner's policy cover my home-based business?
Yes, it can cover some parts of your home-based business. What it will not cover is people who are on the premises of your property as a result of your doing business. So if you're running a home daycare, your standard homeowner's insurance policy will not provide coverage for the presence of children and children's parents in your home. That would be a separate policy or a separate coverage that would need to be added. The standard homeowner's policy will cover some of your equipment, up to, depending on the carrier and the state, about $2,500 worth of equipment that you own in your home and use for your business will be covered by your homeowner's insurance policy. If you're using any more than that, then you're going to need a separate policy outside. What your home-based homeowner's policy will not cover is any errors and omissions or product and operations liability that occurs to you because of your operating your home-based business. Now, this can be a really gray area. You know, if I just was listening to a podcast on my way over to the studio today, and the podcast guest was talking about an invention that he had created, and he was going through the process of achieving crowdfunding through Kickstarter. Now, it's unclear sort of where that line goes from I'm a tinkerer trying to play around in my basement and maybe come up with something I can sell in the future to where I roll over to the point where now I'm actually doing business. I'm out there raising capital. It's unclear whether that capital is an equity stake or a debt stake or just some people kind of throwing their money in the hat for a pre-order. And those are areas I think that we're still trying to figure out from a regulatory perspective.
So interesting. So just because I have homeowners doesn't mean it's going to cover a majority of my home-based business, especially if I'm going to have gas.
A lot of it is at risk.
At risk. So let's continue talking about, say, other types of home-based businesses or entrepreneurial type businesses. What about Uber and Lyft and rideshare businesses? So let's look at it from 2 points of view. One, if I am an Uber driver, and two, if I'm a passenger in an Uber vehicle.
So if you're an Uber driver, I might say network ride sharing in general rather than specific, because their individual policies are changing frequently. But the general standard is that standard automobile insurance policies for liability will cover you while you are not carrying someone for passage. All right, so someone who's paying for the right to ride in your vehicle, once they are your passenger, then your primary auto insurance will no longer cover you for liability. The question that comes into play is what happens if you are available for hire, that is your app is turned on and you're ready and waiting to pick up a fare, but you haven't yet gotten a ride. There is this gap in time in which Uber or the ride-sharing network will not cover you, and your primary auto insurance provider is also not covering you. In those cases, most of the standard insurance companies now are offering an endorsement that adds coverage for you while you are not on the clock. And then also some of them can provide coverage for you while you're on the clock, and then that would become either excess or primary to what the network ride-sharing company is offering. That's if you are the driver.
Yeah, that's a good point. Well, we come to that time in the show where we have to recognize our sponsors. When we come back with Dr. James Hilliard, we're going to finish up the conversation on rideshare. I'm more interested as well, probably the audience, if I'm a passenger and what coverages do I have and does my policy cover me and so forth. And then we're going to talk about some other risks like cyber risk and liability. We'll be right back on We Got You Covered on RVN TV with Dr. James Hilliard. See you in a few.
Whether you're a gourmet cook or just want to eat like one, visit Rostelli Market Fresh, your home for the freshest, locally sourced ingredients to please everyone who loves great food. Our organic meats, quality seafood, and free-range poultry are cut fresh to order. Chefs create culinary-inspired prep foods made fresh every day, which pair nicely with our vast selection of fine wines and spirits. Choose from handmade pastas, artisan cheeses, organic produce, and grocery items, all from the finest purveyors. Rostelli Market Fresh, from our family to yours.
RVN TV is a platform for people of any industry to share their story. Over 285,000 viewers are tuning in to RVN TV shows monthly. We guarantee a great experience that you'll be sharing with everyone you know while increasing your personal and company's brand awareness. But what is your brand? According to Forbes, it's a combination of your logo, your product, your design and feel, and your personality. Did you know that aside from being a guest, we offer even more opportunity to boost your brand? Adding your company logo and website on screen during your interview will allow viewers to recognize your brand instantly. Incorporating images and video clips is another great way to showcase your product during your live segment. Let viewers see how good you really are. And most
We got you covered on RVN TV. We're here with Dr. James Hilliard, and we're talking about gaps in insurance and risks. And right before the break, we talked about Uber as if I was, say, the Uber driver and the business. But what about me as a passenger? So if I'm driving in an Uber and they're in an accident or I get hurt, who do I reach out to cover my damages?
Right, so the standard auto insurance policy does not cover the people who are in your vehicle, right? And so if I was driving with my son and my son's friend, my liability policy would not provide coverage for injuries to my son's friend. I carry personal injury protection, which provides a moderate amount of coverage so that I can pay for medical expenses associated with that child. And so I would have to look at the insurance policies that are offered by the ride-sharing networks to find out how they cover the passengers. I would assume that there would be an opportunity to sue Uber as the sponsor of the independent contractor, but whether they would respond to that is another question.
So if I have my own auto insurance and I'm a passenger in another car, my auto insurance would
If
pay?
you have personal injury protection, it might.
It might.
And that's a very small level of coverage, maybe a total of $5,000 for medical expenses.
Gotcha.
Another issue you might be concerned about if you're a passenger, though, is if the driver accuses you of doing something to damage their vehicle. You slammed the door too hard and broke the window or something like that. Now there's an entirely different level of coverage that covers you, which is whatever personal liability policy is connected to your homeowners or your renter's policy. Which is why some people who are renters think, why do I need renter's insurance? My stuff isn't worth insuring. What is worth insuring is the liability that you carry as you walk around and do business with people on a regular basis.
So it's not just a liability for people that come into my apartment, but it's things that I may do outside of my apartment.
If I'm walking my dog and my dog bites someone down the street, then that dog bite can be covered by my personal liability coverage connected to my homeowner's policy.
Interesting, interesting. Let's talk a little bit about cyber risk. I know everybody's talking about identity theft, cyber risk, people losing their identity, people losing money, and so forth. Can you talk a little bit about cyber risk?
Yeah, my wife actually had her credit card lifted a couple weeks ago, just before Christmas. We didn't realize it at first because we don't check our expenses every single day. But after we found out from the credit card company that her card had been canceled for suspected fraud, the charge that caught their eye was that someone in Maryland had tried to buy something at Lowe's for $1,500. And that was curious because we haven't been to Maryland in a dozen years. They also tried to spend $35 at Chipotle, which made me think that I hope they got E. coli out of it. It was our most recent experience where credit card fraud was a big issue. Now, it turns out that credit card companies, if it's a credit card and not a debit card, are obligated to cover the charges up to about $300, and typically they'll reverse the charges. And they have a huge effort toward identifying fraud and getting rid of it, as we experienced ourselves. Debit cards are a little bit different. The laws aren't quite as stringent, and banks sort of have their own judgment about how much they can cover when it comes to debit card fraud. So actually, credit cards, even though they're from a personal financial perspective, have a little bit more risk for people who aren't as conscientious about how they spend their money. They have more protection in terms of how you get protected from cyber theft. Even more of a scary issue is the prevalence of identity theft, which allows someone, if they have your private, personally identifying information, to actually take out credit lines in your name and then ruin your credit. That can be a lot more difficult. Now, most homeowners policies have some sort of coverage that helps provide some of the legal expenses for repairing credit and some counseling. It varies tremendously depending on the policy and the state.
But is it comprehensive coverage or just kind of like basic coverage?
It varies. Some of it is fairly comprehensive, sometimes full coverage for legal expenses, sometimes with a $500 deductible, sometimes including counseling, like actual mental health counseling along with it, but sometimes it is, here's $500, do your best.
So let's talk a little bit about Airbnb. So one, let's say I want to rent my property through the Airbnb process. And what happens if I am a renter or a guest at an Airbnb property. So where are those coverages and how do
Yes.
they sit?
So let's think about as an owner of a property that you're renting out, there are a couple of areas where you have to be concerned. First of all, if someone gets hurt while they're using your property, what happens to you and what does your coverage look like? And second, what happens if someone damages your property? All right. In both of these cases, under your standard homeowners policy, you will not get coverage. In both of these cases, the home sharing network company, whether it's Airbnb or Vrbo or HomeAway, will provide some sort of coverage that protects you from liability and provides you with an opportunity to seek restitution from your renter if they did something to damage your property. In both of these cases, you have to be really careful because while the network companies are providing a guarantee to compensate you and reimburse you and indemnify you, they are not an insurance company. Their capital is not regulated by insurance companies, and they're not bound by insurance practices of standards of practice that are instituted at every state level.
So then if I sue them, I have to sue them personally. I don't really have any type of like insurance commission to go after.
Yeah, you'll be working with the
risk.
network provider, or you may sue them personally, individually, and then they're most likely judgment proof.
Can I buy additional coverage if I'm going to stay at an Airbnb for a couple of weeks? Can I buy additional coverage to protect me more?
I'm not familiar with that coverage.
It would be interesting because I know, and let's segue into renting a car, right? So, interesting story. We were in Mexico over the last 8 days at a family wedding, and we rented a car online, and it was $460 for 8 days. And when we get down there, they said, oh, you are required to buy insurance, and it's another $1,000. So now my $400 and something expense is now $1,400 expense. And it's either I walk away and I walk 3 hours to where I got to get to go, or I have to buy the coverage. So they kind of handcuffed me, but they never disclosed that on the website when we were there. And every customer that was coming in was complaining, oh, I didn't know about this, I didn't know about this. And I know some credit cards will cover the damage and the waivers and so forth. So when I'm renting a car, does my auto policy cover me for renting that car if I do something to that car?
Yes, you're actually whatever, again, every state and every carrier is slightly different, but the standard policies provide coverage if you have collision coverage and comprehensive coverage, which is coverage that protects your automobile, pays for repair to your automobile if it's damaged. Whatever coverage you have typically, again, not always, but typically transfers to the rental car, which means that if I'm carrying a $500 deductible on my pickup truck, which I don't recommend, but if I'm carrying a $500 deductible on my pickup truck, any car that I rent will also have a $500 deductible. Now, the collision damage waiver that's offered by my credit card or that's offered by the rental car company would be primary to that. In other words, coverage will kick in first, and then my insurance coverage will come in after that.
Whatever they don't pay on that primary, my insurance.
That's correct.
So why would I want that coverage if I already have my own coverage?
If you were concerned about the deductible,
Yeah.
then you would.
Okay.
If you didn't know where you were going, or you thought that there was a higher probability of a theft or a damage by an animal strike, or you were uncomfortable with the scenario and you didn't want to put your deductible at risk, then a short-term coverage might not be a bad idea.
So what happens if I don't buy that coverage and I use my policy? Now that is a chargeable accident against my
It is.
policy.
That's correct.
But if I have this other coverage, is that a chargeable accident if my insurance company doesn't pay?
Well, if you are not quoting your insurance policy, it's unlikely that your insurance company will find out and charge it against you.
Okay.
But if you go out and quote your policy, then they will ask you, and if they later find out that you have a chargeable accident on your police record, then they could come back and cancel your policy for fraud.
So so a lot of times they'll represent and say, well, if you buy our loss damage waiver or collision damage waiver, it doesn't go against your policy, it doesn't go against you, but that's not necessarily true.
Not necessarily true, especially if you're renewing policy and shopping around.
Interesting. So maybe those things aren't really the right thing to buy. And
Yeah, I typically think that's one of the benefits of a credit card that I really look for is the included damage waiver, and we've actually used them in the past and found them to be pretty responsive. It's a different process. It's not as simple as calling my agent or calling my claims department, but we've been successful in filing reports with our credit card company and having it resolved.
Can you talk a little bit about volume limits and uninsured and underinsured limits on various policies? It could be your homeowners covering your contents or your car or yourself.
Right. So let's think about property itself, right? We recently moved to Pennsylvania and we bought a house and we're quoting insurance. And the insurance agent typed in the numbers associated with our home and told us that the insurable value of our home was about 3 times what we were paying for it. And I asked what's going on with that. He said, well, the reality is that no one ever builds homes like they did 80 years ago. And to replicate your home would cost 3 times what you're buying it for. Now, if something were to happen to that home and it were destroyed, you would never replace it with an exactly similar home. So what some people will do then is they'll take the advice of the agent on their first time that they purchase insurance, and they will continue to renew at that value while property values continue to escalate. Now you find yourself 6, 7, 8 years later with a home that it was insured fully when it was first underwritten, and now is insured for about 1/3 to 1/2 of its value. So continuously checking up on what the current replacement value of the home is to be sure that you can move into a home of equivalent quality if you were to face a total loss is really important.
And just like your contents, what you buy today in 7 years from now could be double or triple what you spend. And even though you covered yourself for $50,000, it could be $100,000, and most people are underinsured.
Yeah, and for homeowners insurance, most default coverages are a percentage of the home value. And so you may, if you've been married like we have for a quarter of a century, you may have accumulated antiques that are worth far more than the default level of coverage. And so having a physical inventory of the things in your home and what it would cost to replace them is always valuable when you're going through the quoting process, and it's valuable to have on hand if you, God forbid, ended up in a claims process.
You know, unfortunately, we are running out of time for today's episode. James, if there's some advice you could give the audience on a couple of things, 2 or 3 things they should check on just to make sure that they have the right amount of coverage and they don't have gap in coverage?
Yeah, one of the things I referenced earlier is that I would never buy an insurance policy with a $500 deductible for my vehicle. One of the things I encourage people to do when they're considering their personal insurance coverage is just to look at all of the low deductible policies that you have, whether that's home or auto or home auto health, and determine whether you really need deductibles that low. For my money, given the fact that I'm getting closer to retirement and have a significant asset base build up, I would rather have more coverage at the high end. It turns out that it's a lot less expensive to buy another $1 million of limit above my homeowner's maximums than it is to buy $500 less deductible at the low end. So thinking about the relationship between deductibles and limits, I'm much happier to have much higher limits and keep those deductibles as high as I can. That's really the key piece of advice I give to people when they're thinking about how to manage their personal financial situation.
And that could be for auto, home, medical,
Look at them all together. The reality is I'm very, very unlikely to have a damage to my home at the same time I have damage to my automobile. So unless I get that double whammy, I typically have enough cash in the bank to cover them if I need to.
Awesome. If anybody from the audience would like to get in touch with you, if they have any questions, can you provide them your contact information?
Sure, you can always email me. It's james.hilliard, which is HILLIARD @temple.edu, and I'll be happy to get back to you as quickly as possible.
James, it was a pleasure having you on the show. It was great to meet
here.
you last semester, and I look forward to working with you in the future at Temple University.
Thanks for being a partner.
Today we have Dr. James Hilliard talking about gaps of coverage on We Got You Covered on RVN TV. My name's Rob Shestack. We'll see you next week. And just remember, when you have the opportunity, please pay it forward. Have a great week.